What we heard from our panelists was that many banks are looking to proactively manage that particular risk and understand what kind of exposure they have. That's not only because the regulators are asking for this, but they themselves really want to understand what ultimately is the exposure they have in their lending book or in their investment portfolio. There does remain a gap though with regards to the topic of adaptation. So what we've heard today is that a lot of the large listed companies and the large debt issuers have the resources to measure, to disclose, and to do something about those particular risks that they identify. However, if we look at banks, a large part of their lending book is actually in the long tail of mid-market companies that don't actually do disclosures. So how is it that the banks can actually get a better understanding of what that risk is, where it lies, and what they can do about it? In terms of adaptation, even the largest firms are struggling still today to actually execute upon those risks that they've identified. Another challenge that we identified during this panel was the engagement with the board. We live in a very fractured world that's fast moving and fast paced, and that's full of many different risks that boards have to manage today. Amongst all that noise, how do we keep boards engaged in thinking about climate related financial risk that occurs from physical risk? A lot of it is about thinking, let's reframe the discussion away from climate change and talk about the day-to-day challenges that boards actually face and probably are already mitigating against. So it's about putting things in the context that the board will understand and making them understand that the physical risks they face today are things they may already be tackling with other adaptation measures.